Hey everyone, welcome back to MacroVest. Today we're tackling a topic that's getting a lot of buzz, and it's something every smart investor should be thinking about. Why cash, yes, boring old cash, might be king again in 2025. Is it really safer to hold cash than stocks, crypto, or even real estate next year? Stick around because the answers might surprise you. Let's start by looking at the big picture. As we head into 2025, the global economy is walking a tightrope. Inflation has cooled compared to 2022 and 2023, but it's not fully beaten. Central banks like the Federal Reserve and the European Central Bank are signaling slower rate cuts than many hoped. Growth forecasts are modest, corporate earnings are softening, and geopolitical tensions, they're still bubbling under the surface. In short, the easy money days are over. The buy everything and watch it moon era, gone. We're entering a world where being defensive, being liquid, and being smart will be critical. And that's exactly why cash is making a comeback. All right, so why is everyone suddenly talking about cash? First, let's talk about higher yields. Thanks to years of rate hikes, cash, sitting in money market funds or high-yield savings accounts, is actually earning real returns again. In 2024, you could get 4 to 5% annual interest just by parking your money in safe instruments. That might sound modest compared to stock returns in a bull market, but here's the key. It's risk-free. No market volatility, no sleepless nights. Second, market uncertainty favors liquidity. When stocks are choppy, crypto is unpredictable, and real estate is softening, holding cash gives you flexibility. You can act fast when opportunities arise. Third, psychology matters. In a downturn or a sideways market, cash doesn't just provide returns. It provides emotional stability. You don't panic sell a stock at a loss if you're sitting comfortably in cash. Fourth, and this is big, deflation risks. Yes, inflation dominated 2022 and 2023, but now central banks are worried about the opposite. If economies slow too much, we could see disinflation or even mild deflation. In deflation, cash gains purchasing power. Your money actually becomes worth more over time. That's a complete reversal from the past few years. Okay, before you go stuffing your mattress with dollar bills, let's be real. Cash isn't a magic bullet. First, opportunity cost. While cash gives you stability, it doesn't grow the same way equities or real estate can over long periods. Over a decade, stocks historically outperform cash by a wide margin, even factoring in recessions. Second, inflation isn't dead. Yes, inflation cooled, but it's not eliminated. If unexpected shocks reignite price increases, think supply chain issues, oil price spikes, or geopolitical events, cash could once again lose value rapidly. Third, government policies. If central banks aggressively cut rates in late 2025 or 2026, cash yields will drop fast. In that case, the current high returns on cash will shrink, and sitting in cash could become less attractive. In other words, cash is a great short-term strategy, but a poor long-term wealth builder if you stay in it too long. It's about timing and balance. All right, so what's the smart move? Here's a framework. 1. Keep an opportunity fund. Set aside 20 to 30% of your portfolio in cash or near cash instruments. This gives you dry powder to deploy if markets correct. 2. Optimize your cash. Don't let it sit in a checking account earning 0%. Move it into high-yield savings, money market funds, or short-term treasury bills. 3. Blend with defensive assets. Cash pairs well with defensive stocks, gold, short-term bonds, or even certain dividend ETFs. You're not abandoning growth, you're building flexibility. 4. Be ready to pivot. Stay alert to economic shifts. If it becomes clear that a new bull market is starting, be ready to rotate some cash back into riskier assets. 5. Mindset matters. Think of cash not as losing money to inflation, but as buying optionality. Cash buys you time. It buys you choices. In investing, the future is always uncertain. But 2025 looks like a year where playing defense could be your best offense. Cash provides optionality, it reduces panic, it positions you to strike when others are paralyzed. It's not about being fearful, It's about being strategic. And remember, the goal isn't to avoid risk completely, it's to choose your risks wisely. Holding some cash doesn't mean you've given up on growth. It means you're preparing for it, patiently, intelligently, and with clarity. If you found this video helpful, make sure to hit that like button. It really helps the channel grow. And if you want more clear, data-driven insights on the global economy and smart investing, subscribe to MacroVest and turn on notifications. We've got a lot more content coming your way that you won't want to miss. Thanks for watching. And remember, see the big picture. Invest with clarity. Take care, and I'll see you in the next one.